Internal Revenue Service IRS tax news. An offer in compromise may help some taxpayers settle their tax bill. IRS Tax Tip 2021-60, May 3rd, 2021. Individual taxpayers and business owners can use the IRS's recently updated Offer in Compromise booklet, there's a link to that here, to learn how to offer in compromise works and decide if it could help them resolve their tax debt. Now, the offer in compromise is typically something that might be applicable if you have a substantial amount of tax debt and possibly in situations where it's unlikely that you're ever going to be able to repay the amount of tax debt that you have. In that situation, you could think of both you and the IRS having basically a benefit or an incentive to come up with some kind of offer in compromise, possibly then lowering the debt to some point where you may actually be able to pay it. Note that when you hear commercials of people selling services such as tax relief for people that have debt over, say, like $10,000 or something, if you have tax debt over $10,000, talk to us and we'll compromise with the IRS. This is usually the thing they're holding out as basically the best scenario if they were to be able to get that, generally being the lowering of the tax debt, although there's other things that could be taking place as well. So if you're in that situation, you want to be careful with the firms that you're going to be looking at because they are specialty firms, but you want to make sure you're going with a firm that you can trust to go into it. And you want to basically have a general understanding of the offer in compromise. We are dealing with an IRS, which is a bureaucratic type of agency. So the general outline of what an offer in compromise will be is basically listed out there. It could be complicated, but it's basically going to be listed out there. And you can imagine kind of what you would need to do in order to get an offer in compromise with the IRS, right? The kind of argument you would imagine would be the case would be that, hey, the debt's fairly substantial. I don't think, I probably am not going to have ability to pay it. And therefore, I think it's in both of our best interests to lower the debt. So what would you have to show in order to do that? Well, they know how much the debt is. You'd have to basically give them a format of your income statement generally, right? What's your assets, your balance sheet, and how much you are generating to see whether or not you possibly could pay the debt to make the determination as to whether you could pay it or not, and whether or not an offer in compromise might be a solution in that situation. So some of the forms that you might be using in, say, an offer in compromise might be something that looks a lot like a personal financial statement, balance sheet, and type of income statement. So again, you kind of want to if you want to take that route, there's a lot of information on the IRS website, and you could go a long way, doing your own research and have an understanding of if and when that kind of thing would be applicable. Okay, so an offer in compromise, there's a link to that here, is an agreement between the taxpayer and the IRS that settles a tax debt for less than the full amount owed. An offer in compromise is an option when a taxpayer can't pay the full tax liability. So you have a tax liability, and oftentimes that tax liability includes both the tax that's going to be involved, and it's going to basically include penalties and interest at that point as well. So there's some situations what you're trying to do here is basically say, you can't pay the debt, we'd like to lower it. Now, the other strategies that you could use in that case, of course, is to say, hey, is there any way we can waive some of the penalties and interest, possibly for this reason or that reason, right, to lower the debt in some way? You could set up, of course, a payment plan if you're in a situation with the IRS where you can't pay currently. But if you have a substantial amount of debt and you can basically show that it doesn't look like you're going to be able to pay the liability, then again, that's when the offer in compromise might be something that could be applicable. Also note that many people get into this high debt situation when they move from a W-2 type of employment to a sole proprietorship. And what happens is they start to get 1099s instead of W-2s for the work they're doing, and they just don't do their taxes. And the IRS then assesses their debt based on the income from the 1099s, and they didn't take into account any expenses because they didn't do their tax return. So that's another kind of big bucket of these type of things that often happen when people owe a lot of money. And in that situation, it may possibly be remedied by basically telling the IRS, hey, I had a lot of expenses, that you didn't count because you just took the 1099s and added them up and calculated as if that was my gross income instead of my net income. So that's another category of people that have the large tax burden that might owe taxes simply because they didn't pay the tax, they didn't file the tax return, they have a business, and they didn't report their expenses in that case. So in any case, it is also an option when paying the entire tax bill would cause the taxpayer a financial hardship. The goal is a compromise that suits the best interests of both the taxpayer and the agency. When receiving an application, the IRS considers the taxpayer's unique set of facts and any special circumstances affecting the taxpayer's ability to pay, as well as the taxpayer's income, expense, asset, equity. So here's your basically income statement, right? They're going to say, you can imagine what's going to happen here. They're going to be like, well, how much do you make on a monthly basis? Do you make enough that we could set up a payment plan possibly and pay this thing off at some point in time? And if so, then you would think the offer and compromise likelihood would be lower, right? And you might have to show evidence of that payment, show your cash flows, how much is coming in and out of the bank possibly. You can imagine that being the case. And they might say, hey, what kind of assets do you have over there? You driving around in a $100,000 car or something like that? Because if you are, then it doesn't seem like, you should qualify for an offer and compromise possibly. So if you have a lot of large assets, then again, the IRS would say, I kind of feel like you could pay the bill if you really wanted to, But so you can imagine the kind of the scenario that's going to basically happen here if you go through the offer and compromise. But again, it's somewhat standardized, so you want to read through it if this is an option that might be applicable to you. So the booklet covers everything a taxpayer needs to know about submitting an offer and compromise, including who is eligible to submit an offer, how much it costs to apply, how the application process works. The booklet also includes the forms that taxpayers must complete as part of the offer and compromise process. The current application fee is $205. However, taxpayers can meet the definition of low-income taxpayers don't have to pay this fee. So to give them the offer and compromise, it generally costs the $205. But if your income is below a certain threshold, you can even possibly waive the fee. So there's basically no cost to it at that point in time. It still takes time and effort, of course, to do. But again, if you're in that situation, a lot of the information should basically be there, basically in this booklet, and you may be able to waive the fee on it. So it's worth checking out. And whether you work with someone else to do it or not, make sure that you do check it out before moving forward. And then when you're working with a firm, remember that a standard tax preparation firm doesn't probably do a lot of offer and compromises. So, but they might be a good person to basically get an idea of. And then there's people that specialize in the offer and compromise area, but you have to be careful with, who you choose there, because it's often a high cost type of thing. So you want to make sure that you have an understanding of what it takes to get an offer and compromise, get your research from the Internal Revenue Service, and then make sure if you get representation to help you out with it, that you're getting, you search around and get good trustworthy help on that. So more information can be found on the Offer and Compromise Pre-Qualifier tool. There's a link to the Offer and Compromise Pre-Qualifier tool here. There'll be a link to this in the description.